Hey, what's going on, everybody? I'm Ryan Harper. Even though there's an S in my name is not Ryan Sharper. It is Ryan S. as in Scott Harper. That's a inside joke, only because I was on a show last night where people didn't know my name. Very humbling, very awesome. Today, here on Passing Notes, we're going to talk about the 6 reasons to invest in notes, especially in 2020, going into 2021. And in these chaotic times, the best thing about real estate is no matter what times you live in, you can always make money. So with me, as always, on the Passing Notes, and more, it's more likely it's mainly her, and I'm only on the show because she wants me to be.
I love you.
KRISTIN GERST.
Thank you.
What is your middle name?
Marie.
See, that's easy.
I know.
You can't be like KRISTIN Margaret.
Yeah, it's also,
GERST.
Sounds extremely French, which is not spelled French way at all, but
No.
KRISTIN Marie.
There we go.
You just don't get that. French
So,
so
there's an article. What was that on?
Bigger Pockets.
Oh.
Ooh, hello.
Bigger Pockets, and it was like, was it a positive? Was it a negative? Like, what was the point of the article, other than obviously investing in notes?
The point of the article, which I always tell people is, why should you invest in notes over real property? What are the reasons?
Well,
and is it a and there are a lot of reasons why you should, and I get a lot of arguments back and forth. Oh, I don't want to do notes because depreciation of assets,
right,
or something like that, tax related.
Before we get too far into it, and not to derail the conversation too much, only because you worded it this way, when you say real property, as opposed to what?
Well, real property would be an actual physical house where you would take possession and ownership of that house. Mm-hmm. Or any actual piece of real estate. It could be vacant land, it could be commercial, industrial. But why is being the bank
right
a better real estate investment than actually owning the actual property?
And another tangent side thing. Hi, Jay Lee. How are you? Good morning to you, lovely lady.
Hello. Is she watching?
Yes, she is.
That's wonderful.
I know.
We get to see Jay Lee tomorrow.
And then Donovan, how do I sell a note? Well, keep watching, Mr. Ruffin.
Yes, Mr. Ruffin.
And please, share it, bro.
Please contact me.
And we are almost to 1,000 registers for the event on October 27th.
I'm excited for it.
At the Virgin Hotel.
I'm working on my costume.
Go to thedallasevent.com if you're interested in coming to the biggest, best, sexiest real estate professional event. I think even in the middle of the pandemic, it's probably going to be the sexiest real estate investment in the country.
Yeah. It's going to be the sexiest one I've ever been involved with.
Yeah, because it's at the Virgin.
Yeah.
Yeah.
The name just says sex. Yeah. Or lack thereof.
Well, I got my room. I still need to get Seiku's room. Did you get a room yet?
I don't know.
Oh, it's a 20-minute drive. It's like listen, I've
close.
seen you at networking events.
That's
if
fake.
Anybody needs a room, you
me.
need a room.
That's my good friend Kim.
That is not. Damn.
Kim Stallings, you getting a room?
Damn! You name dropped and then name dropped with a second name.
She knows I love her.
I know, everybody loves her.
Kim, I'll just bunk up with you if that's cool.
Oh, Paul Starnes. Paul Starnes is part of investment. We'll just go full promo on
everybody?
Yeah, Paul Starnes is part from InvestSmart Mortgage, who are the premium sponsors for the event. Also, Capricorn Mortgage is...
Capricorn Mortgage. I'll have a small, cheap cocktail table.
It ain't cheap.
It's going to be... Well, it's not cheap, but, compared to the pinnacle person, then again.
Anyway,
my little cocktail table that I'll...
6 reasons to invest in notes according to Bigger Pockets.
According to Bigger Pockets, or anybody who has a brain and has done both. The best reason to invest in notes, other than doing rental properties, truly passive income.
Okay. But when you define passive, because I think that's one of those, not to go down a rabbit hole, but people think passive. I think because for so long, people think real estate, passive income, and they think it's synonymous. Regardless that the fact that real estate is an entire sector, industry, and there's so many facets to it. But they just go, ooh, passive income.
people do not realize actually how much time they need to spend on it.
Yeah.
If it's a rental property and they've got it being managed, okay, well, what happens when they have to decide if it's going to be renovated, or do they need to update anything, or
is their property manager worth a damn?
right? Are they being stressed out by their property manager?
Side note,
I
love
I know.
you know, there are people that I know that you know as well, and I won't name drop them, but they have an apartment complex that they sold a year ago, and they just got hit with like an $80,000 bill from a year ago because the property manager didn't pay the taxes from like a couple years before that. And so now they're going through this process of going, wait a minute, we paid, but you billed us. We paid, but you attributed that bill to a year we didn't even own the property. So they're going back and forth on that.
Yeah.
Because the property manager, not all property managers, like all people, are not created equal.
Right. Well, and people make mistakes, but you're the owner of that property, and you are responsible for the taxes. You're responsible for the insurance.
To bring it all back to the passive income conversation is that passive if you're having to go, oh, fuck, $80,000 tax thing.
You know, all of that stuff can happen, but when you're owning the note on it, when you're owning the debt, you're not responsible for any of that. Mm-hmm. So all of my notes, you know, they are, we'll call them managed by the note servicer, which I don't pay for. My borrowers all pay for. And they just direct deposit my profit, my money.
How often do you talk to your note servicer?
Quite.
Well, how often would you talk to your note servicer if you weren't friends with that person?
If I wasn't friends with that person, probably never.
That sounds passive to me.
I mean, yeah, they send me a report once a month. Mm-hmm. I don't really look at it. I send it over to my accountant. They look at it.
Do I still have money?
Yeah, I'm like, am I getting the money? Everything looks good. I scan to make sure that, okay, everybody paid this month. But other than that, no, I let my accountant handle it if there's a major problem. The main thing is, when you're dealing with truly passive income, it's the same every month. So, okay, did I get that same dollar amount from all of these that I got last month?
Uh-huh.
So, yeah, it's truly passive income.
And then also, not to shit on wholesaling, but people always love passive income. It's like wholesaling is a job, bro.
Oh, do they call that passive income?
I think people that get into wholesaling from the very beginning because there's no money to start. Well, that's not true either. They buy into the passive income.
Yeah,
thing.
I mean, but that's a job, and that's going out and working. You've got to go out, you've got to find that property, and then you've got to go find your buyer, and then you've got to make sure that the sale goes through, and, you've got to know what you're doing there. Mm-hmm. But when you're talking about notes, you just park it and forget it. People are like, how many do you have? I'm like, I actually don't know that number right now.
You're like, all of them.
And then somebody, I got... This is kind of embarrassing. I got a text from a friend of mine who owns the first on this property, and I own the second. And I had no clue that I even owned that second until I started looking through it. I go, you know what? I do have a vested interest in this property. And I just forgot about it.
It's funny because
do I own that?
Yeah, that goes into another conversation of like, as you scale your business, and if you don't have your ducks in a row when it comes to organization, and people, especially if you're starting out, this concept is foreign to them. There is a potential you forget that you have a house, you have a note, you have a property, and then that fix and flip that you bought out of a 17 house package sits there, and the only reason you remember you have it is because you got a tax bill, and you're like, oh crap, this has been sitting on the market for 8 months and doing nothing.
Well, but with the note, it just keeps performing. So
hopefully.
I'm not in there, right, hopefully. That's the idea, is that they're going to continue to perform. But it's so passive that, when did I buy that thing? I don't know, 2-3 years ago? And you just kind of, okay, well, it's just in there in all of them.
So you already alluded to it, and I think that goes into the second point, which is it's easier to manage.
Right.
When we're talking about landlords, when we're talking about apartment complexes, when we're talking about wholesaling, we're talking about that because those aren't truly passive. obviously there's different degrees of passivity.
Right. I mean, I think the most passive you could get
Is like
would be if you
multifamily.
owned a rental property and you had a property manager managing it for you.
Like
But you will
multifamily,
have to make decisions every month.
Right. But when I was saying you alluded to it is if you have your servicer, if you're not friends with your servicer,
That's fine.
servicer,
Yeah.
you just never talk to them, and you get emails and you get updates, and hey, here's your statement for the month.
Here's what your portfolio did this month. You know, occasionally if you have one that somebody gets behind, you will get an email from somebody at the servicing company going, "Hey, what do you want to do here?"
Yeah, I don't have experience with this, and I think both you and Grant Kemp, who was on the show a couple of weeks ago, do have experience with it, which is occasionally you'll just have a $15,000-$20,000 check.
That all of a sudden hits your account.
And you're like, where did this come
Where
from?
did this come
and it's
from? Yeah.
because somebody paid off their loan.
Right. Yeah, so I mean, and that happens, and you might not know that it's coming up, and surprise.
That's the surprise you want.
No.
No?
I don't ever want that surprise.
Because you want the long
I just want the cash flow.
Yeah.
Because then you have to go take that money, and you got to go find something else that then just starts making you money.
Mm-hmm.
And for me, I look at, all right, how much do I make per month? Hey, there's my budget, right? Okay, well, I want to get a better car, or I want to get a better house. Okay, well, I need to go buy more notes so that I have more money per month so that I can go do that.
So when we say passive, we say it's easier, and it's one of those questions of why doesn't everybody do it? And I think I know the answer.
And easier, and let's also say cheaper. Should be cheaper to manage.
Okay.
At most, I mean, even on a note that might be $1,000 a month,
Mm-hmm.
PI, principal and interest, it is still going to cost me, if I'm the one having to pay for it for whatever reason, $30 a month to have that serviced.
30. What?
Yeah. Whereas if you've got a rental property,
It's like 10% usually.
It's 10%, which would be $100.
Yeah.
So even if you're paying for it and not your borrower, it's still going to be super cheap.
Does that $30, does that scale? Like if you have 100 properties, 1,000 properties, 1,000,000
It
properties?
goes down.
That's what I'm saying.
Yeah. If you have a 500 package, I mean, they probably do it for $20 or $25 a property.
Right.
Yeah.
Versus a property manager's like, well, we still need to have some in reserve in case we got to do this. And, oh, by the way, AC went out on 123 Main Street, blah, 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 blah.
Yeah, and you've got 50, and maybe you have 5 ACs that go out, in a month.
Yeah.
So it's, they are definitely easier and cheaper to manage.
So I think the next one coming up is probably the most, I haven't read all of them, is probably the most relevant to
What's going on now?
our current life.
Yeah, and so if you're going to go read this article about, profitable in different market conditions, different types of notes, the shocking thing is my default rate hasn't changed since COVID hit. My mortgages are all still performing.
Mm-hmm.
I think maybe I've lost one in that time. So if you figure one note, I mean, I might lose one anyways,
Right.
It's not, that's not a really high default rate. So I would say that my business is still extremely profitable. My note business is still extremely profitable, even in the middle of a global pandemic.
Which, if you are a fan of diversity and a fan of hedging and a fan of not losing your everything,
Right.
that's a good thing.
Right. No, absolutely. So, what I'm excited for is, yes, it's been a really, going now just full bore with non-performing notes,
Mm-hmm.
because there are going to be a lot of non-performing notes out there.
Well, they're already starting.
Right. They're already starting.
The only problem is, like, when it comes to the banks, they're not participating yet. Paul, I appreciate the question. We will get to that after we get through the list.
Yeah. So, but no, it's, when you're looking at different market conditions, all of a sudden these non-performing notes are going to be extremely profitable. Now, the guess is when. Is it 3 months, 6 months, 9 months? But it's coming.
I think the movie The Big Short, I quote it a lot.
Yeah.
Just because it's so relevant to this conversation, as always, because that whole movie, that whole 2008, everything was about notes.
Right.
Short. That's essentially what it was. The MBS, the mortgage-backed securities. That being said, 98% of everybody lost everything, but there was a small population that were on the right side of it, and they were highly profitable.
On the short side.
Well, yeah.
When you're betting against, housing.
Well, but they read the tea leaves.
Right.
So
there was a small group of individuals, and and there were one or two investment banks that got out of their positions in mortgage-backed securities.
So I guess the question I would have, because Paul, I can ask my question because I'm here, is if it is passive, it is easy, it is profitable in all market conditions, how aware do you need to be of those market conditions to always be profitable? Did I word that right?
No, you did. So especially for like my performing note business at Capricorn, because that's what Capricorn does, performing mortgages. People have been asking me, are you still buying at 80% loan to value? Or is that going to tighten up? I haven't had a reason yet to lower that, but I suspect probably by January that I'll be down to 75% loan to value, because we'll see kind of a decrease in value of real estate coming up. So you do want to be aware of what market conditions are doing. Where are you buying these notes?
Right.
Because if you go in and you pay too much for that thing and the bottom falls out of the market, well, then you've overpaid for that note.
It's the first rule of real estate. Don't lose money. And,
buy low.
Money. That's great.
Buy low, sell.
That's a Grant Kemp saying. He's like, first rule of real estate, don't lose money.
No, I mean, but you want to buy low and you want to sell high, obviously.
You make the money in real estate when you buy.
But you got to watch what the values are doing. So if you see a decrease in the actual, real estate market, if you see values going down in properties, you need to be a little more conservative when you're buying a note.
But that's
non-performing or performing.
But that's really to answer that question, or to answer my own question, that's really only like if you're actively buying. So if you just say, look, I've got X amount of dollars, I'm going to buy 50 and then I'm done, and I'm just going to live off the cash flow of those 50 and then I'm done. Well, depending on if you have an ARM or if you have a fixed rate, like you're done. There's really not being aware,
You know
right?
what? I love I'm going to buy 50 and then I'm just going to be done.
I know.
You're never going to be done. I already tried that one. You just don't stop. Everybody goes, how much is enough?
That's how I feel about pizza.
I know. Yeah. No, seriously, how much is enough? And I'm like, I don't know. I haven't hit that point yet. I thought it was 50 at one point. It's not 50.
So number 4 on the list is, unlike stocks, it's backed by real property.
Right. So, I mean, another truly passive investment would be stocks, which is why people like them, right? They invest their money in the stock market. It goes up, it goes down. Hopefully it will continue to go up. But we've seen that some companies will just go under. And if a company shutters its doors, you got nothing. That stock is worthless.
Well, there's also an element to stocks that you don't really have that much. There is an element in real estate, but not as high.
Right.
It's this concept of market movers. So you'll never be I don't care if you have $1 billion, you're never going to be a market mover. A market mover is countries. It's these giant conglomerates that can dump $100 billion into a thing to make, like currencies. That happens in currencies a lot. People like to think that they're going to make any kind of impact on whether it goes up or down with their trade. You're not. So same thing with stocks is, obviously if you're a giant, Bill Gates or one of these, Bloomberg or who's Nebraska guy?
The Oracle?
Oracle, yeah.
Warren Buffett?
That dude. Warren Buffett. Mr. Buffett, if he,
Buffet.
Those guys, yes, they could be market movers. But like in the real estate, unless you're buying up entire neighborhoods, you're really not going to be able to make it go up or down. You can a little bit, but not like a market mover.
Right. No,
Does that make sense? Did I just ramble, or did I make was there a strong point there?
Well, we still don't have control over it. But
right.
The important thing to remember is that if you were to buy a note as a passive income, that house is still there.
Yeah.
that commercial office building, whether now it might be worth less, than it was 5 years ago or last month, and you might have to do something with it, but that real piece of real property is still physically there.
And that note is still there. Grant, again, if you don't know who I am or you don't know who Grant is, I did a show with Grant for like 2 years, so I reference him a lot. He referenced the fact that he had an owner finance house, and he drove by there to check on it, and the house was gone, but they were still paying the full amount. So he was like, I guess I don't say anything because I'm still getting paid on it.
Yeah.
Normally you would freak out. You would lawyers and what the shit.
Did he ever find that house?
I don't think he did.
Yeah.
I don't know if they destroyed it or stole it or whatever, but the point to the whole story was they're still paying. So if somebody, regardless of what happens to that house, if the note is still being performing, it's like, do you care?
Yeah.
I know. I mean, you care because you're stressed.
You're stressed. I mean, and you do care because they are not...
Because the collateral's gone.
The collateral's gone, and they are not keeping their end of the deed of trust, but the house is gone. So, yeah. I mean, it's not like you're going to go foreclose on what? Foreclose to take back a vacant lot?
Well, it depends on where the lot is.
Maybe. And maybe they were getting ready to build, and I would probably, as long as they were paying for it, I'd probably hold off and wait to see what happened. I wouldn't go after them.
So, I guess, unlike stocks, backed by real property, hopefully.
No, I mean,
it's
that is a real rarity. Now,
Yeah.
When looking at, buying non-performing notes, I have had a situation where somebody tried to sell me one, and I was really excited about it.
Yeah.
Until I had a local realtor in that market drive by it and found out the house had been torn down 6 months prior by the city.
That's why you should always do your due diligence.
And do you know how many people, especially if they're buying like a bulk of these things, may or may not put eyes on it before? So it happens that people, I mean, obviously this person selling it to me didn't put eyes on it.
Well, that goes into the kind of a point, even in real estate, and not even real estate, but even if you've done this for a while and you're a so-called expert, if you allow yourself to get like complacent, you will be stupid at times. Like say you're buying a single family fix and flip to flip, and you never physically walk the property before you buy it. You may find out that when you buy it and you send your foundation guy over and he's like, you don't own this one, do you? You don't want to hear that from your foundation guy.
Right.
Because he thinks, I've heard that too, and then immediately sell it and like lose 10 grand. Just because you're like, no way, I just don't want to touch it.
Right.
But, yeah.
So, I mean, it is backed by real property. And probably in our discussion, you can talk about a rental house, but a rental house is not passive income. There's still a lot of work.
Yeah.
And liability, as you've pointed out. Just like with your friends who are going through the previous, all of a sudden there's $80,000 in past taxes owed. So, again, stocks would be the closest thing to another truly passive investment as our mortgage notes, but they're not backed by real property. And so in my estimation, there's a lot more risk involved.
Right. And again, it's
how about all those people investing in stuff like Bitcoin? That's not even a company.
It's the future.
I get it, but it's an electronic currency. I have no idea.
That's entirely
It's a different thing, I know, but what controls that?
Well, I'm just saying it's entirely different. My favorite thing about it was a year and a half ago, 2 years ago, when Bitcoin was on the rise, a lot of the real estate gurus were suddenly Bitcoin gurus.
Right.
And you're just like, so okay.
Yeah,
got it.
I know.
Got your number, buddy. Number 5, mini exit strategies: wholesale, value add modification, and long-term cash flow.
Right. So, and many people don't know this, but you can wholesale notes.
Okay.
Yeah. Get a note under contract and then go sell that to another person.
I think another way of saying that is when you're dealing with real estate, it's sometimes, not always, again, every answer to every real estate question is...
Maybe.
It depends. Clearly, we did not rehearse that. The answer to every real estate question is it depends.
I'm like, I should know this answer. You're
like,
I got it wrong.
I didn't prep. Where's my notes? Where's my cue card reader?
Can you at least text me that before you're going to ask me a question I should know the answer to?
Well, what I was going to say is, in the world of real estate, is at times it can be very wild, wild west. And if you can thunk it, you can do it. And that's why that whole creative...
Maybe.
Well, that's what I prefaced hard with it depends.
Yes. I love what you just said there, except when somebody does something and I'm like, my God, is that even legal?
But then you find out it is.
Or then you find out it isn't, and you're like,
And this is where we come to the segment where I am Ryan Harper, not Sharper, and I am not a lawyer.
Right.
Ryan Sharper is a lawyer.
Either. Go get an attorney, and before you do something stupid and illegal, make sure and ask.
Yeah, and when you're doing stuff, when you're getting creative, you need to find some sort of mentor. There are plenty out there. KRISTIN just happens to be one as well. Subtle plug. But if you're going to get creative, you got to have a strong mentor coaching network to guide you. And even then, get a lawyer to double check
just to make sure. Well, and there's a lot of us who've been doing this a long time. I mean, I've been doing this, oh my God, going on 16 years.
Yeah. Okay,
there's been a lot of laws that have changed. And there's stuff where I'm kind of like, oh, that sounds like a gray area. If like some new law pops up and I'm like, okay, we'll just do it kind of close to this. And that stuff happens. I mean, I'm not saying I try to do everything by the letter of the law, and I basically use professionals for everything. But I'm sure that there's something that maybe I'm, just maybe haven't heard of a new rule about or something like that, and I think
when it comes to the exit strategies, for me, and I think for a lot of people, especially when you're newish to real estate,
right?
Like it was 3 years in before I realized that I was living in a box, and in reality, there is no box when it comes to the creative side.
Right.
It wasn't until because I was with Tim Harridge and his crew for 3 years, and I thought we knew a lot of people. I thought we were doing a lot of things, and it wasn't until I went over to Propelio with Daniel and saw how his brain worked and how it was basically the Matrix. There is no spoon.
Right.
It was like, oh.
Yeah.
So when we talk about different guidelines and so-called rules, not legal rules, but just like, hey, these are your baseball rules.
Yeah.
Those don't exist.
No.
And if you can get creative.
Right.
So when it comes to the mini exit strategies, there's a few listed, but the reality is it's infinite.
Yeah, there's tons. So, I mean, you can wholesale notes. What do most of, if you pick up a non-performing note, there's an infinite ways that you could modify that to benefit not only the borrower, but yourself as the lender. And what else could you do with that? I mean, you could get them to sell it and approve a short sale. You could get it performing, do long-term cash flow. Hell, the note could have been performing from the beginning, and you could just keep it for long-term cash flow. Or you could say, I'm going to keep it for 2 years and sell it.
Real quick, only because I don't want to interrupt, but Matt Smith is watching, and
hey, Matt Smith. I haven't talked to him for a while.
I know he was a super fan over at the Propelio days, so hopefully he'll be a super fan of Professing Notes. So welcome.
Yeah. Hey Matt, how's it going?
Yeah.
That's good. I know he was always.
Well, I mean, fan. When you see a super fan, you gotta acknowledge.
I know. Yeah, super fan.
You gotta keep him. Well, hopefully he'll be a fan of us. So anyway, to put a bow on that, the exit strategies is if you can get creative, which you should in real estate.
Well, people don't realize that just like with a piece of property where there are infinite exit strategies, but you can do that with notes as well. And people just think, oh, I've got this 30-year note and I'm like handcuffed to the thing for 30 years. And I'm like, no, you're not.
My favorite / most annoying aspect of being in this business is, hey, what do you do for a living? Oh, I'm in real estate. Oh, so you're an agent?
Yeah, I get that all the time.
No. Why? Ugh.
I'm like, never.
Do I have blonde hair? No.
Hey. No. I've never been a realtor. No desire to be a realtor. Never even crossed my mind.
I don't want to bake cookies.
I like baking cookies.
I do too, but I'm not for work. maybe, I don't know. Anyway, so mini exit strategies.
So right. So and going from that to the last one, you can create win-win-win scenarios. Now, my favorite one is why would.
Well, before you move on,
Yeah.
what it says win-win-win. Usually people say win-win. Why is it a win-win-win?
Because we're not just talking about yourself as the investor. You're also talking about the borrower / homeowner. Mm-hmm. And then you're also talking about the bank that you bought that failed non-performing asset from. And that's the one that blows people's minds. They're like, why would it be good for the bank to sell that off? And there are a myriad of reasons.
Yeah.
People also assume that the bank selling it at, say, 50 or 60% of unpaid principal balance, that they are instantly losing because all they hear is principal balance, what's owed on it. But they don't take into account how much money have they made on this thing? How long has it been going? Has it been performing for 5 years?
I think that's the frustrating thing of when you buy stuff on payments is not really knowing how an amortization table works. And the fact that when you first buy that house at 30-year whatever, you're paying like 99.999, I'm exaggerating, percent of that payment goes to interest.
Right.
So even if the first 2 years, your majority of payments are all interest.
First five on a 30.
Yeah.
Which is why you start getting those letters from your bank around 4 or 5 years going, hey, time to refinance. Don't you want to refinance? Rates are super low.
Gosh, we need that whole, the more you know.
Right. So, and what's...
Because I didn't think about that. At 4 or 5 years, that's when... Because it makes sense, because they want that money.
And all of a sudden, people are like, yeah, I'm getting all these refinance things. That sounds like a great plan. But what people don't realize is if you continually refinance like every 5 years or worse, every 3 to 5 years, that I know people do this. They're like, oh, I'm going to refinance. I'm going to refinance. I'm saving money. Look how much money I saved. Yeah, plus your closing costs, plus whatever.
Yeah.
Oh, my bank gave it to me for no closing costs. Why do you think that is, moron? Because you have paid nothing down on that house.
One of my favorite conversations I've ever had in the real estate world is with Tyler. And I think I've told you this story before, but because I was working with Tim at the B2R days.
Yeah.
B2R was, hey, we're institutional money and we're going to flood the landlord market with portfolio loans.
That was the goal. That didn't happen.
I don't know anything about it. Anyway, but when this happened, I was like, man, hey, Tyler, you can refinance your entire portfolio and go buy more properties. And he looked at me like I was a fucking idiot, excuse my language. And he goes, why would I do that? All my properties are paid off. Why would I want a loan?
Right.
Like he looked at me, and again, that goes into another question of leverage versus cash. But from his point of view is, I've got everything paid off. Why would I want leverage?
His are all paid off, and that's fine because he doesn't need leverage.
Right.
But I mean, if you have, but I mean, you can do it with notes as well. I mean, you can get leverage. So it's really the question is, I'll get calls from people going, "Hey, can you buy this from me because I'm trying to raise capital because I want to invest in multifamily or I want to do this or I want to do that."
Yeah, and then when the win-win-win, the bank side of things, because I think you alluded to it a second ago, of why would a bank ever sell? Well, there's a thing called FDIC rules.
Yes. Yes. I mean, and so depending on when...
I don't know them because I'm not a lawyer, but...
we just finished September 30th, so we're going to start having all of the reports coming out, and it shows how much they have on deposits, shows how much they have out there on loans. It shows how many of those loans are in default, what type of loans they are. And so when you're reading those reports, they are required by law to keep a certain amount on deposit to match those loans. And so they might look at that and go, wow, we've got to get rid of some of these non-performers.
Yeah.
You're not going to get rid of your performing paper.
Well, this thing is like, the next comment I'm going to make, it has no research back to it. It's just a gut feeling, and it's only from conversations with KRISTIN and just being in the business for a couple minutes. I would hate to be a bank manager right now because of all the chaos of the year, because of all that,
Defaults are way
the
up.
Corona money coming in and flooding their banks and them having this false sense of security because they have so much money in their banks. And then it's like, I would be concerned, and again, I have no basis for what I'm going to say is, I would be concerned with how many banks are not compliant.
In New York City? New York, right? Okay, so New York is bad, San Francisco are bad. Those are two really, really bad metropolitan areas. I think I saw something that FHA loans, just FHA defaults, were something hovering right around 25% of FHA. Now, that's not including all of the regular mortgages as well. We've got 3 hotspots here in Texas, which is surprising.
Which are?
Just outside of Houston, San Antonio, and Irving. We made the top 10 list.
When you say just outside Houston, like which direction?
Sugarland, I think, was where it was at.
Close enough.
But again,
that makes sense.
But as far as hotspots for FHA defaults right now, and I mean that could be anywhere from I think it was more than 90 days, but I'm not sure.
So the win for the investor is the cash flow, the passivity, the long tail on the money. The win for the bank is to get it off their books. The win for the borrower
is that they're going to be able to, especially if they decide they really want to stay in the house, right? But they couldn't afford it for whatever reason. Their situation changed.
And Nancy at the bank is not going to help you out with that loan.
The bank is not, right? So you can come in, and because you're buying it so much less than what they owe on it, you can modify them and come up with a win for the borrower.
And it still be a win for you because
it's still profitable for you. You haven't lost any of the money that you put in there.
Yeah.
And and again, especially dealing with that unpaid principal balance, to be able to come in and lower that amount, that's especially nice. Like if we start seeing what we see in the next year, where property values are going to go down. And
we should put an asterisk in one more win, and that would be the Ryan win, which is not having to deal with cat piss smells.
Oh God, yes.
Which is a strong thing. If you are a wholesaler or want to be a wholesaler, get comfortable with the smell of cat piss.
Or just bring a cat with you.
Bring the cat with you?
Yeah, when you're looking at property, just kind of let a couple cats loose in there. Pee everywhere. You
What?
can get
No.
that property for a lot less.
Yeah, but I don't. But anyway, because
cat piss is one of the most horrid smells ever.
Yeah.
And you cannot get it out.
But the thing about real estate is, in the saying is, the bad. That's not the bad smell. That's the smell of money, which is true. But it's like, ugh, it still smells like ugh.
That cat pee smell.
Yeah. So win-win-win. It all comes down to money. The investor gets money. The bank has access to more money, and the borrower gets pays less money, but they're still paying the same in a lot of ways.
They still get to stay in the house.
Yeah.
I mean, you don't have to go do any rehab, which is something I promote in the note group. I'm like, do not rehab if you can get away with it.
Yeah.
And to be fair, there's a lot of real estate investors who get into this because, and I just say, all right, well, what are your goals as a real estate investor? I want to own all of, Memphis, Tennessee. You want to own all of Memphis, Tennessee. I hear that and it makes me almost vomit because I'm like, no, you really don't want to own anything because everything you own, that's a liability. Whereas if you are the lender and you have a debt, those are all assets.
Yes, and I think we need to start a new segment on this program, which is where we shit on HGTV. Like a poop emoji.
When it's fake.
Well, obviously it's fake, but the poop emoji on top.
Fake, yeah.
Well, the thing I was going to get to is HGTV is great programming, and it's fun to watch, and it makes you, man, I want to fix up a house. This will be great. The problem is, as an investor, your job is not to fix up a house. Your job is to make money. Your job is to not lose money. So if you watch HGTV and you're like, ooh, Chip and JoJo, whatever her name is, man, they make these beautiful houses. I want to make beautiful. Why do you care if it's beautiful? Make something that's going to sell. Don't. If the most neutral color is eggshell, go with eggshell. Don't go with that floral print because you thought it would match whatever. But that's my problem with HGTV is people want to get creative on the financing. Don't get creative in don't think outside the box. If somebody wants a homeowner and they want to do it, let them do it. Don't make decisions for you, for them.
So
that's my poop on HGTV segment for the day.
which you're saying we need little poop emoji hats or something?
No, just a digital. No, no.
I'll get you a present. I'll give you a Christmas
But I mean,
present.
do you agree with that? Though?
I absolutely do. The only reason I watch those flipping shows because I loathe them because after 15, 16 years of meeting new investors and seeing so many people lose their ass on a flip because they didn't know what the hell they were doing and they over renovated and they didn't buy it right. You know, they paid way too much for it. But what I do enjoy watching is I sit with a pen and paper and I start writing down the numbers of what they've spent. What they show on their actual numbers is bull.
I think there's a meme where it's like, new couple, one's a giraffe wrangler, one's a gerbil raiser or whatever, a math tutor for blind kids or something, and their budget is $1.2 million. You're like, what?
Yeah. But no, if you watch HGTV, the other thing I like is go to the reveal and look closely at the camera because 90% of those are not even finished houses. Right? Because they have a deadline. I'm like, how is it that they always make these deadlines? Yeah,
and then, I mean, what's funny is Donovan, who was watching earlier, he posted something on social media like maybe 2 or 3 weeks ago. He's like, now that I'm on a TV show, I realize how fake the media really is.
Yeah. No, it's so true.
Yeah. It was funny because he was just like, because I haven't seen the show yet. I feel like
Remember,
a bad friend.
I told you I did.
But like Danny, he says Danny doesn't come off the best in that show.
I told you
and
that.
she is such a sweetheart.
I've never met her.
She's a sweetheart. She's so lovely.
Yeah.
But, you know.
She comes off a little
gold digging.
Gold digging.
Which is
ridiculous.
Yeah,
they've
been together.
Backstory.
Yeah, they've been together forever. But it's just, anyway, love them too. But the whole point of that is just to show that
no, it's
the
all
stuff
fake.
is fake. Yeah.
It's all fake. And, you know, and we know of somebody who was on the DFW version, the contractor.
Oh, well, I also know Andy.
Yeah.
Oh,
and that was, I wasn't going to name drop this. No, and I mean, knowing how that whole show ended up, which was complete train wreck.
22-day flip turns into a 4-month process.
Where everybody lost money.
Everybody.
Including the contractor.
Yeah.
Like a lot.
The only person that didn't lose money was HGTV.
Right.
But anyways.
Did Paul have a question?
Well, Paul had a question, but let's get Matt first because he was talking about, when we were talking about the interest rates.
Yeah.
He was talking about, do you still pick principal over interest? And I'm not really sure where he was talking about that. But we were talking about how, like, you know, the beginning.
Right. When you have a loan modification? Is that what he's...
Sure. Let's just answer it however you feel it.
So do I pick principal over interest? All of that kind of works together. If I'm going to buy, like, a performing note, I really like notes that are at least around $100,000 unpaid principal balance. Just because costs me the same. Obviously, we're talking about, you said earlier, you've got $1,000 a month note or a $300 a month note. The cost to house those is the same. So, yeah, I tend to like to go for those bigger dollar amounts. As for interest rate, no, I'm always looking at 9 to 10% interest rate. And even doing loan modifications, it gets a little hard. Like if their loan mod that you're taking them from is 5%, you know, because for whatever reason it's a bank loan, right? So they have 5%. It's sometimes a little hard to get them to agree to that 9 or 10. But guess what? They do if they want that, if they want to stay in that house. But to get them to that higher interest rate that you need, a lot of times you do have to decrease the principal to get that payment to something that they can afford.
Paul was asking earlier what his question was how do I get started in investing notes and how much would you need to start investing?
There's a lot of different ways to get started in investing notes, and some of the ways that I talk about, because to do what I do at Capricorn, that requires quite a bit of capital to get started. But one way that you can get started was how I got started in note investing back in 2008. I took my rental properties that I had long-term money on, that I had mortgages on, and I wrapped those. If you really don't have any money, you could go pick up a property subject to, and you could wrap that and create a note. And a lot of real estate investors don't realize, hey, yeah, I'm already a note investor because I've been doing owner finance. And, oh, yeah, I picked up that property subject to. Or you find, another thing that I like to do, which I'm talking to the group about today in, an hour or so, is just when you find a property that's stale or expired, right? It's even fallen off MLS. Nobody wanted it at that price. You can go in and negotiate and do it on terms. Obviously, you're going to want to sell it at 9.
Wild, Wild West.
You want to sell it at 9 or 10%, but everybody's thinking, 3% is what people are getting interest rates at. So go in and offer them 4 or 5, so that you can then go and wrap that with a 9 or 10% note.
And to clarify, Paul was asking what was the average investment, not the lowest investment. Like, what's the typical average investment for notes?
I don't have an answer for that.
Yeah.
There is no average. There is.
Because it goes back to what you just said about whether it be a $300 note or a $3,000 note.
Is it performing or is it non-performing?
Yeah.
And what's the cheapest thing I've ever bought? $600. 600. Did that have other costs that came with it?
What was the upside on that?
Huge. Like, really, I don't have the details directly in front of me, but yeah, no, I had some attorney.
I think there's like $87 here. Can I buy a note?
Oh my God. You been stripping again? They are ones.
No, that's the TJ Cousins charity jar.
Oh.
Remember when every time he smiled, he put a dollar in there?
By the way, I had lunch with him 2 days ago.
Oh, really? How's he doing?
Freaking awesome. We had a blast.
Oh, God.
We had a blast hanging out at his country club.
Well, he was like, yeah, just keep it. I was like, I'm not. No, I know how he is. He would hold that over my head. So if it's ever brought up, like, here's your dollars
TJ,
back.
Yeah, I'm going to tag him in this. I'm going to like, hey, look at the last few minutes of this. So
your dollars are still there.
Yeah. No. You can.
I'll probably spend it someday.
So to buy a non-performing note, and people know I bought a couple at the beginning of the year, $1,500 a piece. Mm-hmm. Are they crappy? Yeah, they're totally crappy. Did I want to buy them? No, I really didn't want to buy those. Yeah. And I would have passed on them. Now my eyes have been opened and I'm like, those are freaking awesome, right? Can I get more of those? Do you always want to buy those cheap ones? Not necessarily. You really do need to do your due diligence. You have to have somebody put eyes on it. Send you photographs, because I was offered another $1,200 one, and that ended up being the one in Chicago that when I sent a realtor by, it had already been torn down by the city of Chicago. So just keep in mind that, yeah, those cheap ones, but you also are going to have some attorney's fees. If it's in Texas, a lot of, depending on, who it is and what that's going to cost. But you also that might be a longer term investment if you're talking about New York or Chicago, some other places that just take a while to foreclose or maybe get that property back. Mm. So you got to keep all of that stuff in mind when you're investing in notes.
So before we tune out, before we play out, I don't know, whatever. If you have any questions, drop them in, and we'll do a couple quick plugs. But if you have a question, we'll try to get it in before we leave. Tell us about the note group.
I love the note group. So basically, my idea behind the note group is we are going to have a huge consortium of very successful, knowledgeable, and hopefully wealthy real estate investors, where we are all, because I teach everybody how to fish. Here's how you find these things. Here's what you say. So everybody will be bringing in their own deals. Then we have all of us who will be like, yeah, I want that one. I want that one. And then we also have lots of people going, hey, yeah, I'd like to JV with you on that. Hey, I'll loan you money for that one. So again, it's, if you create a successful group where everybody knows what they're doing, there's always somebody to buy from, sell to, and borrow from in the group itself.
And what makes the note group different than, say, other training programs?
Well, it goes month to month. So it's not a humongous amount of cash that you're giving up front. And I'm not holding anything back ever. Pretty much the same way that I've always taught. It just, hey, this is how you do it.
One thing that I've, and it wasn't immediate, it was an evolution to it, and we may still evolve from it, is the fact that we're doing the training videos that will live on the program or live forever.
Yeah.
We do that live with no interruptions. We just do it. But the students are also on a Zoom call while we're doing that, so they can take notes, watch it live. But then immediately when we're done with when you're done with the presentation, there can immediately be an interaction and immediate questions asked,
Which I love.
Yeah.
I also love the fact that they're there, and I can like glance up at the TV and see that, they're sitting there watching, which is really cool. And then they, it's not like I'm presenting to nobody,
Right.
or filming them to, there is an interaction. And I love that interaction at the end because, yeah, I've been doing this a long time. And for me, a lot of this stuff is intuitive, like just because I've been doing so long. And so I'm just like, oh, do we need to talk about that?
Yeah.
But when they immediately ask questions about it, it helps so much because I'm like, wow, I never even thought that was a question.
So if you would like to sign up or get more information, you can go to passingnotesgroup.com. You can get the information there. You can sign up. You can reach out to KRISTIN
At info@capricornmortgage.com is the best email. Or my Instagram is KRISTIN GERST.
Or KRISTIN at Capricorn Mortgage.
Or,
that works.
Oh,
too.
you want the KRISTIN? Yeah,
Well,
that's a
that's
long
what's
one.
up there. Yeah.
Yeah. KRISTIN at Capricorn Mortgage
Instagram's
Investments.
good. Yeah.
Instagram is good. Actually, I've got a lot of people
Good.
who've been DMing me through Instagram, so that works. And I also have Facebook Messenger.
Yeah.
Find me on Facebook.
And then I'm Ryan Harper. You can find me on Instagram, Ryan S.
Scott Harper.
Yes, because my mom wanted me to be F. Scott Fitzgerald. She wanted me to be R. Scott.
I love that.
You didn't know that? Anyway.
I did not know
So
that.
you can hit me up on the
very
Instagrams, DM me. Last question from Mr. Matt Smith, because this is the most important question of all time. Do you have a YouTube channel? And the answer is absolutely yes. Would really appreciate it if you go there. I'll drop a link here in a momentarily. Or you can just go to my Facebook page, Ryan S. Harper, on Facebook. And I think I actually shared this stream on that. And then you can go there and just click subscribe. Turn on the notifications. If you're watching on YouTube, thank you. Leave a comment. Subscribe. Share it.
Share it.
That stuff helps. That's why I wrote it. It helps more than you realize because it really does.
It really does. And we're trying to get it out there. And so many people don't even know that you can buy and sell notes.
Yeah. Those algorithms, man, they get you.
I know.
So, well, thank you everybody for watching. Thank you, KRISTIN, as always, for being here. Any final
words of wisdom? Any nuggets? None. Just get out there and do it. No more analysis paralysis.
Just do it.
Just do it.
Look at you being all Nike. All right. Y'all have a great day. We'll see you next time. Thank you so much.